Hi, today we're going to be doing a stock review and analysis for Main Event Entertainment Group, that is ticker symbol MEEG, listed on the Jamaica Stock Exchange's junior market. We're going to do a full review of the company. We're going to talk about just a little bit about what they do. We're going to go through their website, understand what their products and services are. Then we're going to take a look at their history. When they were listed on the stock exchange, what was that initial offer that they made available to the public back in 2017. After we do that, then we're going to look at the last year and a half of the company. So we're going to go through the annual report and the Q1 financials that came out just, I think, a week ago or 2 weeks ago, if I'm not mistaken. It may be a little earlier than that, I'm not sure. But I know it was for the quarter ending January 31st. So I believe it was released early in March. So forgive me for that. Then we're going to talk about just some of the highlights, where the company is possibly headed. We have been through a pandemic, and so Main Event is one of those companies that would have seen just a shift in terms of the landscape for their revenues. I want to talk about that and some things that are upcoming for them. So stay tuned. It's going to be a good session. If it's your first time, feel free to ask any questions in the chat. We do 2 stock reviews per month, and we do a weekly stock market update Fridays at 6:30 p.m. Feel free to join us for that one as well. So let's get started. All right. So before I go any further, I have to say that anything that I share here is for discussion, education, entertainment, and illustrative purposes only, and should definitely not be construed as professional financial advice, solicitation, or recommendation to buy and sell any securities. I am not a licensed financial advisor, so I'm not legally allowed to give you advice on any securities. All right, so this is the Main Event Jamaica website. So let's look at what they do, and I like to use the company's website to highlight their own products and services. I think it makes sense. So it says, over the past 12 years, the Main Event Group has built an organization that provides turnkey solutions to deliver Jamaica's premier event management, digital signage, and promotion services in Jamaica and the Caribbean. So that's really the 3 key things that they offer. That's event management, digital signage, and promotion services. So it says that they have consistently been first to market with products and services and led the sector in innovation and use of technology. The strategic vision is to be valued for expertise, continuous innovation, and creativity that impacts the entertainment and technology industries. So that speaks to their target customers in a vibrant way that has served to guide the progression and growth of the company. So that's in a nutshell what they do. It speaks to their products and services. It speaks to their target customers, right? Let's see if there's anything else here. So it says since launching in 2004, they have traded on the strength and experience and vision of principals Richard Blair and Solomon Sharp. The 2 have been partnering since 1990 as RAS Promotions, growing patronage of events, Beer Vibes and Hot Shots by 500%, and so on and so forth. They were first housed at 18 Annette Crescent, and I'm gonna apologize here if this is a little blurry. It's from their website. I think it was posted as a JPEG and not text, so when it scales, it gets a little bit blurry. So they were first at Annette Crescent, and let's see if there's anything else worth highlighting here. Okay, that's really just speak to their history. So today, with a staff complement of 200 plus employees and contract workers, Main Event hosts its central operation in Kingston from Lady Musgrave, with offices in Barbican, Newport West Warehouse, and a newly opened M-Style office and Western Division in Montego Bay, right? So that's an overview of the company. I was able to find their prospectus. So this was their prospectus released back in January of 2017. So they have had an offer on the market that was priced at $2 per share. So they're making available 60 million shares for subscription at $2 per share. Let's see what the offer says here. This was the share capital at that point. Authorized share capital, 320 million shares. Issued share capital, 240 million. Maximum to be issued by the company. And then we saw the different allocations there. All right. So that's a prospectus. I'll link it in case you want to check it out. This was 5 years ago. So, take it in that context. And the basis of allotment, this is one of the things we like to look at as well. So for the persons who, for the different pools that would have applied, the Mayberry Clients Reserve applications got the first 3,000 shares and were allocated 100% of the 3,000 units, which balance in excess was 4.5%. So that alone should tell you it was very, very small allocations, 60 million shares, and they raised 673 million, right? So that's widely oversubscribed, right? So these were the different allocations. What that means for you is at the time, if you applied, you would have received very little shares, right? And we're going to look at the top 10 shareholding soon. And I believe about 93, almost 94% of the shares are being held by the top 10, right? So there's not a lot of shares available for a main event on the market currently, all right? So we're going to look at that a little later, but I wanted to just, give you that history. Let's actually just have a look to see how it traded as at today, right? So let's focus on today. It would have closing price $9.69, volume traded 28,000. It says last traded price $9.98, low and high are as such. So let's go. I think we can go as far back as 5 years on JMNB Moneyline. So I think we're able to see everything. So this is February 2017. So they would have listed, I believe, in February. And this is the performance over the last few years. So in 2018, it would have gone to a high of $7.76. Would have seen, up and down performance since then. This is 2020 in the heights of the pandemic, as low as $3 around there. And then we saw recently on the announcement of, let me go year to date, on the announcement of the restrictions being removed at March, right? So the restrictions were removed, I believe, on the 18th of March. And I think I have an article here which speaks about it. We saw where it went from, we kind of saw some price, some volumes, and the price moving up at that point. And then at 18th, when everything was, fully released, it went from about $6 all the way up to $10, I believe is the peak. And for the last month, it's been, since April, it was about $8, and today, as you saw, it ended at close to $10. So it's been trading around that range for the last month. Volumes are usually around 100,000. So the average is definitely lower. Most days it's gonna be somewhere in the thousands, right? So not much volume because, as we said before, not a lot is being held by the public. And if we go to the top 10 shareholder, which we're gonna do in a sec, we're gonna see that not a lot of shares are made available to the public based on just how much was made available through the offer. All right, so these volumes, I have not looked at this transaction, but I imagine that this has to be either some top 10 shareholder movement or something, but we'll confirm soon, right? But on average, we're gonna see somewhere in the low thousands, maybe 20,000 or less kind of volume for this company. Some days not much at all. All right. So there's that. All right, so before we look at the financials, let's just kind of look at how the news about the company has been for the last few months. So I'm on the Jamaica Stock Exchange website, and I'm on the tag for MEEG. That's the ticker that we're looking at right now. And what we like to do here, if we're going through the review of a company, just look to see if there's anything that has been announced about them, just to give us, some context to anything that we may see in terms of price. Maybe, there was a spike in price or a downward movement in price. We usually try to match that with anything significant in terms of news that would have been announced. If we don't see anything in the news and we can't match it back to anything, then that's something that we may not be able to explain. But I personally always assume that there are persons out there with more information than I have. So if there's a movement in price and it's outside of a typical supply and demand, then there may be something that's happening there that maybe at some point I'll find out. All right. So we're going to look at the annual report shortly. And then we're going to look at the unaudited results for the 3 months ended January 31st. We mentioned that before. But let's see if there's anything else that they would have mentioned here that we want to just have a read. So change of address, resignation of Mr. Gregory Seymour, finance manager. Let's see. So usually we're looking for anything like maybe dividend announcements, trading in shares, things like that. So we saw on May 6th, 2021, a connected party sold 30,484,000 shares. That was on April 30th. That was over a year ago. Let's see. Passing of chairman and appointment of acting chairman. That was done February 12th, 2021. Not seeing a dividend announcement. I believe their last dividend might have been 2020. So if we scroll long enough, we should see it. There we go, right? So February 21, a dividend was announced. So we're gonna look at that in detail a little later. All right, so we've gone back as far as 2019 here. All right, so that's one place that I normally check. Let's look at some of the articles that have been published about them in terms of news. So this was March 23rd, 2022. Not seeing was the author of the story, but says main events look to return of party profits, right? So, being one of the companies that would have been significantly impacted by the pandemic would have seen a great impact to their revenues. And we're going to see that when we look at the profit and loss statement very soon. So let's see what this article is saying. And zoom in. It says main event is hanging its hat to the return of profitability to the business that suffered more than 40 million loss for the quarter to January this year. All right, so we're going to see that in detail soon. On the government's recent withdrawal of the Disaster Risk Management Act, right? So this is March 23rd. As I said, I believe March 18th was the announcement. So this article would have been released shortly after. So that announcement, what that did now is provide them opportunities, because it says here for the past 2 years, they would have been severely impacted by it, right? And as I said, I think that almost explains what would have seen in terms of the movement of price from in the $3-4 range all the way up to $10 based on this news for that week. That's a suspicion anyway, or a part of the answer maybe, right? So we can affirm that our confidence remains strong. The lifting of the restrictions on the entertainment industry now seems imminent. While trends and conditions are difficult to predict, we're eager to restore interest following this latest setback. CEO Solomon Sharp and Finance Committee Chairman Dr. Ian Blair said in a statement accompanying the 3-month unaudited financials. So we're going to look at these financials, and they would have said it as a part of that. At that point, they said it would not have been lifted. As it said here, the ban was lifted on March 18th. All right. Let's see if there's anything else. So the reimposition of restrictive measures brought an immediate and sharp decline in demand for services, and we faced multiple requests to scale back or defer holiday season projects. That would have had an impact on their revenues, as we said before. So what we're seeing here is just more evidence to that fact, right? In some instances, planning and preparatory work had already begun and certain costs were already incurred. Such sunken costs have contributed to elevated operating costs this quarter, all right? And as I said, we're going to look at the statements, so we're going to talk about these highlights soon. Yeah, so this is more of the same that we already know. Let's see what the next article says. This was March 18th. I think this was the day that the announcement was made. So entertainment stakeholders are in a festive mood following news that the restrictions placed on the industry has now been lifted, right? So a very big roadblock to their revenues would have been lifted with this ban being removed. All right, so I won't read any more of that article. It shows really an overview of the different stakeholders in the entertainment industry, what their comments were on the restrictions being lifted. All right, let me see what this one is saying here. I'm going strictly, okay, yes, I think I have this one based on this key point to note here. So when companies list on the junior market for the first 5 years, they have the benefit of paying no their tax is reduced based on them listing. When you get to the 5-year mark, I believe you pay 50%. When you get to the 10-year mark, it changes as well, right? So what they're saying here is that on February 8th, 5 years after the anniversary of their listing, they'll be taxed at 50%. What this means for them is that their revenues going forward will be taxed at 50% the normal rate. So whereas you would not have seen that high tax amount before, you're going to start seeing it. What this means is that their profitability will not be the same. And also this coming out of a pandemic is going to be definitely an interesting time to see what their net profit will look like, all right? And then this last one here, I'm wondering if there's anything specific that I had from this article. I'm not sure. Let me see. I'm not seeing main event here. So yeah, I don't think there's anything here. And this article was about Norbrook Equity increasing a stake in another event company called SNB Creative. I tried to do some research on that company, could not find anything. If there's anybody in the chat with information on the company, please send it to me. I wasn't able to find anything, but they would have made a 600 million investment through Norbrook Media and Entertainment Group. So that could potentially be maybe a company that will list in the future, who knows. But you just spoke about the acquisition. As I said, I tried to find details about what SNB Creative does, could not find anything to that effect. All right, cool. So let's look at the instrument summary, and then we're going to look at the annual report and then the Q1 report from there. If you have any questions while I'm going through, feel free to post it in the chat and I'll take all the questions at the end. All right. So it ended the trading day, 969, we mentioned that before. And this is, we looked at how they would have, started the year at, let me do year to date, started the year at $4.55 and would have ended the day at $9.69. And what we're seeing is that a year to date increase of 115%, quarter to date, 30%, and it's down about 2% week and month to date. Volume, as I mentioned to you, it's not very high, 460,000 units, but if you look at just the amount of units available, just being 300 million, then you'd understand why not a lot of units will trade. And we look at the top 10 shareholders soon, and you'll see where most of the shares lie. In terms of their earnings, this is what we're looking at for the last since they've listed. Now, in the cases where you don't see all the information here, like you don't see some of the colors, it's either that quarter was negative in terms of revenue or it just was not uploaded. So typically you want to look down here. So for example, it says 0 here. It doesn't show a negative, it shows 0. So you wouldn't see that information there for 2019 for Q4. Sometimes that happens. Not sure why, but sometimes the information is not always there. So we can see we're starting from Q2 2020 when the quarter after the pandemic started, we started to see those negatives in terms of revenue. They were able to do positive revenues in 2021. That's about 3 quarters after the pandemic would have started. Maybe they started doing digital events, who knows? And then it would have led to positive revenues there. They also had a good, a better Q3 than the previous quarters, and they were able to do positive revenues again for Q4. Again, we'll get more details from the annual report, but just looking at these numbers, if you go back to 2019 and you just see the numbers that they were able to do, 93 million in revenue for Q2 2019. But if you even look at from when they listed in terms of performance, it's not very consistent in terms of what the numbers are showing. And that's one thing that you want to note about this company based on what this history is showing. It could be that some of their business is seasonal. It could be that maybe they're still trying to ramp up, so maybe expenses need to be controlled. We would need to see insight into those numbers to tell the real story. You can't just look at the numbers and know. But in terms of revenues, Q2 seems traditionally to be their better one, which would be the quarter that we're in right now. That's something to note. Q3, that would be if it ends in January, February, March, April, and then May, June, July. May, June, July, that quarter, maybe it's because it's summer, who knows? That's just kind of those patterns you want to pick out when you're trying to look at a company, because then you want to understand how the performance may be during those quarters, right? So Q2, the Q that we're in now, is traditionally their best. And what that would mean, let's say we go back to see. So if you even notice from this chart, we're in Q2, we've gone all the way back to 2017. Well, this would have been shortly after their IPO. Usually in the first year of IPO, you don't really want to judge a company based on that. But if you notice here, we're seeing, let's see, for 2019, price might have gone up maybe on the reporting of Q2. Then throughout the rest of the year, it finds its way down. Then it makes its way back up again, then finds its way down. So it seems to kind of follow that pattern based on their reporting, right? So again, you'd have to do more research than just, looking at the numbers initially to say that. But what we do is match the information that we know based on what the price history is showing. And that's what we're kind of seeing this pattern, right? So peak around Q2, then finds its way down, then finds its way back up. It's interesting that they're trading at this price right now. It could be, anticipation of things being, open. So this is definitely their sharpest, increase in price than we've seen in the history of the company. So that's definitely one worthy of note. And there's something I thought of just now to look at. It slipped me. Maybe I'll get back to it. Right? So okay. So let's look at what the report says. Now I'm just seeing if there's anything else that I wanted to see here. I wanted to check out their price to earnings to see how they stack up. As you guys know, I use I use maybe a trade sheet for that. Now we're not seeing current PE, and my guess is because their last earnings was negative, there is no PE to show here. But their 12-month projected PE is 101, right? So at current price, it's trading at 101 times earnings, right? Which should tell you a lot about, how analysts may perceive this company based on its current price, right? So Marvin is asking if I would consider, if I'd compare this report to a report on tourism. I'm not sure I would do that, only because tourism, no. Let me see. So for industry comparison, I would typically use VM Wealth does a nice summary. I'm actually searching for that now. I want to see the category that they place main event in. Sometimes some of these companies don't fit into a clear category, right? So sometimes they stand on their own, right? Because I'm not thinking, you could say tourism, but I'm not entirely convinced. So okay, let me share my screen again. So VM counts them under other. So they have a group of companies that's just lumped under other, and that's it, right? So it's not really even fair to look at the PE for this group, because it's just not going to make sense, right? And as I said, the PE is not any here because their earnings were negative. All right, so I wouldn't do that. If you're looking at the company to say, well, maybe there is some amount of their revenues that you can attribute to tourism, maybe they're part of some key events, things like that, you may be able to say, well, I'm going to see how that industry performs to see whether or not this could be a positive or negative thing for the company. Maybe it could do that, but to compare it with a company in the tourism industry, I wouldn't do that. I think it stands on its own, which is why then it could be hard to say whether or not the PE is high or low, because you don't have anyone else to compare it to. 100 times would traditionally be considered high. So, take that for what it's worth. But, PE is, of course, one of the valuation methods, and I'm sure there are other factors that maybe investors are considering. But considering this current state of their performance, them just coming out of the pandemic, it's quite interesting, the current price that it's being traded at. It's all I can say right now. Interesting is the word I'd use, right? All right, so let's look at their annual report. Thanks for that question, Marvin. Ryan, I'm not sure what you're saying there. Dude, if you have a question, and shout out to Peter for being here from 6 o'clock. All right, let's look at the annual report. I really like the design of this annual report, by the way. I like when companies, take the time to design it well. I know it's not a big deal. What really matters is the data being shown, but how you present your company matters, I believe, right? So it speaks to their mission here. Passionate people committed to creating magical memories. We believe in doing almost anything to deliver your crazy ideas, bringing the best of the world to satisfy the imagination and beyond. So they serve multiple industries in entertainment and technology, as mentioned on their website. These are their core values, things that we like to look at here at Learn, Grow, Invest. What does a company hold as its core value? I mean, of course, we're going to match that to their performance, right? So it's a form of measurement to see, how they would have, maintained those core values, right? All right, so that's notice of AGM. So I'm going to scroll straight to the highlights here. All right, so this is speaking to their accounts. I'll check the highlights here. So we saw 2021 profit of 16 million, coming out to the loss for 2020. Retained profits at the beginning of the year, 429 million, as opposed to 475 in 2020. Balance attributed to shareholders, 446. No dividends were paid last year. We saw their last dividend was 2020, I believe, February 2020. No transfers and retained profits at the end of the year. These are status of their directors. Let's keep scrolling. We're not gonna focus on this for the review, but definitely good to look at those details. All right, let's see the highlights here, right? So what I found, you definitely want to take some time to read through the management discussion and analysis. It gives you the context and color to the financials. It gives you the highlights. If you're not familiar with reading financial statements, looking at the MD&A can give you an easy way to understand the numbers before you even get there, all right? So in 2021, the company continued to navigate the challenges associated with the global pandemic. Despite the challenges, they were able to achieve improved performance in an industry severely impacted by the COVID-19 pandemic. Their performance was spearheaded by the growth in their digital signage, right, which makes sense. In the middle of a pandemic, taking advantage of digital opportunities makes sense, and through innovative ways of capitalizing on the reliance placed on virtual events in 2021. So this would have told the story of how they were able to go from a loss in 2020 to 16 million in profit for 2021, right? So they recognize that diversifying their suite of services will be key to ensuring their continued success in the future. Now, this is interesting for me always to see how companies pivot. Once a company is listed, there's always an opportunity to turn things around, right? So we saw where their stock price would have improved, and we saw where they were able to go from a loss in 2020 to profits in 2021. And to me, what that meant is that, and now this may sound weird, right? I was gonna say the longer they might have been in the pandemic, the more they would have been able to take advantage of digital signage and all the ways persons were doing virtual events, etc. Right? So I'm not saying I wanted the pandemic to continue, but I'm saying maybe they would have found increasing ways to grow their profits within that landscape. But now that we're back to normal, they may now have to undo some of the steps they would have taken. Now, it could be, I think, potential for growth, because where you have now some companies may prefer now to do virtual events instead of in person, right? Maybe this gives them an opportunity to serve customers outside Jamaica, right? They mentioned Jamaica and the Caribbean. So maybe this gives them an opportunity to expand outside of Jamaica. So that's what I'm seeing here from what we just saw, right? So it says the focus on cost containment measures would have continued from 2020 with close monitoring of all cost-related activities and implementation of improved cost management controls. They have managed to keep their costs down while maintaining their reputation as premier event management, production, promotions, and digital signage solutions company in Jamaica. All right. Their ability to adapt and find solutions was critical to their performance. This resulted in a rebounding from an 18 million loss to 16 million in net profits in the current year. All right. Okay, cool. Do you have any information on it that you could share with me? Journey with Bantu. I should check out your YouTube channel, by the way. You've been to a couple of our lives. I'll check it out after this. All right. So then it's speaking about the entertainment sector now. So globally, there has been a decline in the entertainment market over the past 2 years. And we saw where that has changed. A lot of events are popping up all over the place. So this bodes well for them. The imposition of island-wide lockdowns and no movement days further affected the sector, which saw the entertainment industry grinding to a halt. We know all of these things already. I think we can scroll past it, right? We're gonna go straight to their outlook, right? This would have been the makeup of their revenues. I'm interested to know what the MM Academy is. I would have seen that. I need to do some research into that. That seems interesting to me. So if 55% of their revenue was from entertainment and promotions, then that shows you why they would have had such a fall off. Now with that changing, you can expect them to do better in that area. Digital signage was 20%, and this seems like rental of chairs and other equipment would have been 11%. And then okay, I'm gonna get to that question by Andrew, or that statement by Andrew soon. All right, and this would be their revenues from 2018 forward. So we say they had a great year in 2019, which then now begs the question: will this current year see them going back and surpassing what they would have done in 2019? Right? Again, that may be something that investors are looking forward to. Who knows? This is their gross profit from 2018 till now. Last 2 years, again, significantly impacted. All right, so, and this would be total assets, slight fall off from where it was in 2019. And again, that makes sense. Maybe some forms of equipment weren't needed anymore. Maybe they thought it best to maybe sell some. Who knows? We need some more information to see that. Net profit for the last 4 years, somewhere between 80 and 100 million, then all the way down to negative in 2020, up 16. So I really think they're positioned to have, again, that growth for this year. Where they will land is where we're yet to see. All right, that shareholders' equity, yes. Outlook is what I'm looking for. This is the part I wanted to focus on. So as I close 2021 and look forward to 2022, health concerns and economic conditions continue to evolve. They're optimistic that the ease of the COVID-19 restrictions towards the end of their financial year will continue into 2022. Vaccination rates remain one of the lowest in the region. We saw that. And with many unknowns, it is unlikely they'll see a strong return of entertainment activity in the short term, right? Of course, we know that we're past that. They continue to believe wholeheartedly in the viability of their core business, and they remain confident that they're in a healthy position to take advantages of opportunities in the coming year. Let's see about, all right, that's major risks they would have identified. Continued closures, we saw that. That's no longer a factor. Susceptibility to weather and other external social factors. This is key for me. I think we're in our rainy season right now, right? So hurricane season for us, help me guys, is from what, April to about October, if I'm not mistaken. So that could have an impact on their revenues as well. We saw where the rains would have had an impact on output for Carib Cement. This, since they would have done, public events, in-person events, the weather is going to impact them. So if we have like a major hurricane, and again, that adds some color to when we're looking at their history here. This Q3 again may make sense because this Q3 would be traditionally or hurricane season. All right, so it could be maybe because of the weather in that quarter, you don't have the same levels of revenue. That's something interesting. I'd love to see to maybe research that a little bit more to see. But again, that's just a connection I'm making there based on that information. All right, so up to 70% of their events are held outdoors, which can be greatly impacted by weather, causing cancellations and ultimate loss of revenue. There you go, right? All right. That's corporate data. So even though I'm scrolling through these sections here, if you're a main event shareholder, you want to read the entire report. 74 pages may take you an hour, hour and a half to read. It's not very long. If you are a shareholder, you want to read the entire report. All right, just wanted to add that there. So now I was mentioning before that the top 10 accounts for about 93% or 93.8% of the total shares. So combined holdings of 300 million issued shares is 212 for the top 10, right? So, oh, okay, this is directors. Apologies for that. So out of the 300, 280 is owned by the top 10, right? So what this means is about 20 million shares are available to the public, right? 20 million, right? Their IPO was for 60 million and only 20 million is left to the public. That means at some point, maybe they bought back shares, maybe the top 10 bought more, who knows, right? So I know the IPO was done by Mayberry, so maybe MJE bought more shares over time. We would have to research that. But yeah, it's very, very tightly held by top 10, which shows you that the volume is not going to be a great deal. What does this mean for them though? Who knows? We see where companies, if their stock doesn't trade heavily in terms of volume, maybe they consider things like stock splits in the future. Who knows? But I mean, I'm not saying anything like that. I haven't heard anything. I'm just saying, looking at the number of shares available, how it trades. Thanks, Matthew. I figured it was somebody here. Yes, I saw that SVL acquired the 10% stake recently, right? Yes, it was during the pandemic. I remember seeing that. Thank you, Matthew. Right? So yeah. All right. Let us continue there. All right, so we're just gonna look at their performance for their last annual report. So we saw that fall off in revenue that we mentioned before. Direct expenses, gross profit. Let's look at some key things here. This was relatively the same. It seems that, well, I'd love to calculate the margin, which I think I have in Excel. I'm going to get to that soon. So remember, we mentioned in terms of taxation, you're going to start paying 50% to this taxation number is going to increase for the reports for this year. So you want to look out for that. And where they would have had a loss last year, they have profit for the last annual report, and the EPS would have gone from -6 cents to +5 cents, right? So that's what we're seeing here, and we see where the impact in revenue. Let's look at note 6, see what that says, see if that gives us any insight as to the makeup. Perfect. I love when companies do this, right? So we saw where entertainment and promotions would have decreased by about 30%. Rentals would have gone down by about 30% as well, almost 30, maybe 25%. So everything went down. Digital signage went up, which they mentioned, but not. I mean, this is from 84 million to 155 million, which is notable. I'm interested. I haven't heard anything about M Academy. It doesn't seem to bring in a lot of revenues though, just about 4 million. So I don't know if that's something they do seasonally. Not sure, that's something to take note of. Maybe that's training that they provide to companies. But we would have seen the digital side grow, and maybe that would have led to more profits, because I guess digitally it wouldn't take as many resources, man hours, etc. But this will definitely improve for 2022 based on the restrictions going away, right? So that's that breakdown that we're seeing there. I love when companies give that breakdown, all right? So let us look at balance sheet. We saw where there is a slight decrease in assets. That's what we're seeing here, 791 million. And property, plant, and equipment, again, it could be that they would have tried to offset some of the equipment, maybe tools that they would not have needed during the pandemic as a way to manage costs, because they spoke about cost-cutting measures. Right-of-use assets would have gone down in value. Their receivables would have gone up for the last year. You want to look at those carefully. It is corporate clients that do expect some line of credit, and their cash would have gone up, which is good to see. In terms of equity and liabilities, we want to pay attention to here. Long-term liabilities went down, lease liabilities going down. That is definitely good to see, especially in light of the last 2 years that they've been through. So for the most part, their liabilities went down for last year. Very good to see. All right, retained earnings, 446 million. Share capital, 103. All right, definitely want to see the cash flow statement. Let's look for that. Here we go. So in terms of cash flow, net profit, we know that was 16 million. Let's see net cash. So net cash by operating activities would have decreased by more than half. All right, that's what we're seeing here. And let's see if we can find any specific contributing factor here. So their receivables would have been 198 million in 2020, and we're seeing a negative 26 million here. That, I believe, is the major factor in this number. Related party balances, payables, taxation paid, right of use. Okay, yeah, because I mean, depreciation was relatively the same. This was the key number that drove it down in terms of receivables. Cash flow from investing activities, they would have not made any major purchases for 2021. Proceeds from sale of property, plant, and equipment, 451,000. Interest received, 1.6 million. And so net cash was actually positive, 895,000 from investing activities. In terms of financing activities now, that's what we're seeing here. They would have received a loan of 122 million. And then these are the loan repayments. No dividend was paid, and so on, right? So in terms of cash flow, that would have increased from 132 million to 195, right? And again, this just makes sense based on how they would have been positioning themselves throughout the pandemic. We're definitely going to look to see any changes for the Q1 financials that we're going to look at. So let me see if there's anything worth noting here for the notes. All right, just anything that seems interesting to point out. We looked at the breakdown of revenue. So that's something that we'd want to see. I'm just scrolling through real quick. It's just something that I've learned to start doing. You don't want to miss anything that might be important to note about the company. Sometimes there are little gems that are hiding out in the notes. All right. All right, expenses by nature. This is definitely worth looking at if you are a shareholder. I usually, like to look at the big numbers and work my way down. All right, I think that's it. I think we can go to Q1. All right. All right, let's look at the highlights here. So this is for the quarter ended January 31st, 2022. So let us see here. So year over year would have seen an increase of 15% in terms of revenues for Q1. So as I said, that's typically let's go back to here again, Q1. This is the quarter that we're seeing here. So for 2022, for 2021, it was 8 million. And what we're seeing is that for 2022, it's, no, is that profits? No, this number here, it says earnings. That's profits, right? Okay. So not revenues. Okay. So revenues went up 15%. Gross profit actually decreased by 29%. That's what we're seeing here. And at that point, so remember, the Q1 for them would have ended January 31st. That was before the restrictions were lifted. So they would have alluded to, some things would have been cancellations, some, based on what would have been happening for them, it would have led to some losses, right? So this is not surprising to see. Net profit, based on the loss, it's minus 603% because it was 8 million before. So that's the number that we're seeing, right? At 8 million there, that's what we're seeing here. So based on the amount, it's negative 603%. Earnings per share, again, you kind of expect these numbers to be similar here. Total assets would have decreased by just 4%, and shareholders' equity. So for these, I'm going straight to the notes, right? I want to see what they're saying. Again, just bearing in mind that this was January, and in March, we know that Q2 is going to be different for them. The question that you need to ask yourself, if you're a shareholder or planning to be, is the current price factoring in the expectation of investors for them to do really well Q2 based on the restrictions being lifted? That's a question I'd be asking. So I'm just looking for anything that would be different than what we would have covered before. I'm looking at maybe outlook, right? Not seeing anything there that I'd want to highlight. Let's look at, I'm going straight for revenues here, right? Because we want to see what would have led to that loss. So revenue would have been higher than the same quarter last year. Direct expenses were much higher though, twice the amount, well, almost twice. So gross profit was less, right? And I'd want to calculate that margin soon. Remind me to do that. In terms of expenses, admin and general expenses would have increased. Selling and promotion, depreciation was lower, amortization was lower, all right? So in terms of operating profit was actually a loss of 38 million. All right, so even before we get to the taxes, which again, for future reports, is going to be higher, that's what would have led to their net loss of 40 million, right? So hopefully, again, we get to see that breakdown. We may not see it until the annual report, but their direct expenses would have led to the loss that they saw in Q1, all right? Which actually now makes me want to maybe do a quick glance here to see if they speak to the direct expenses. I'm just looking to see if, well, let me zoom in. I'm just looking to see if they can say what factor led to that significant growth in those expenses. All right, I'm not seeing anything there. I'm going to scroll through the rest to see. Identification. I would have loved to see a breakdown of revenue there. These are their current loans as at Q1 report. So that's worth noting as well. All right, so definitely would want to see their Q2 report. That is going to be one of them that we're going to follow up on to see what that shows, because we are expecting them to do better for Q2 based on the current current economy. Full disclosure, I'm not a shareholder in this company, but for purposes of our stock review video, we like to follow up those videos to see how the company would have performed after we do the review. So I'll be personally looking to see what their Q2 looks like. I'm really curious to see. So going back to what we would have saw on Mayberry's trade sheet, this projected PE of 101 times, that is something that I want to see what Q2 looks like, what Q3 looks like, to see how this number changes. But at current prices, current PE, make of that what you will. All right, so let me get to any questions. So I think we confirmed that SVL would have bought into top 10. So that would have explained again why even less shares are available on the market. Orville confirmed the 10%. That's what we saw on the top 10 shareholder report. So Journey is saying that partner is an employee for SMB. Okay, cool. All right. All right. So if you could, not necessarily that you need to I'd just love to know a little bit more about the company. So either message me privately, share any resources or links. I just want to know about the company. Never heard about them before. And who knows, it could be something that maybe we need to look out for more details from on the Norbrook side. So anything that you can share with me would be helpful. Okay, cool. If there are no, so let me get to the question that Andrew said, right? So Andrew was saying it's starting to sound like the decision to invest will be based solely on outlook sentiment. So you guys know that I say this in the group all the time. Sentiment or outlook is a part of the decision to invest in a company, right? We see on our market where not everything goes based on fundamentals, right? So outlook or sentiment is a part of it, right? Look at how IPOs perform. For IPOs to do 100, 200, 300%, that's all sentiment, right? It's not going to be based on the performance of the company. And I'll tell you why. When an IPO comes out, what you will have, that IPO price is usually not really, I don't necessarily want to say it this way, but typically the IPOs are attempting to give a valuation to the company. So let's say that IPO is valued at $2, like Main Event was. They would have done a valuation and say, okay, these shares are worth $2 each. Now a broker may release an equity analysis which says, okay, this offer is for $2. We believe it's fair valued at $2.50 based on some method that we have. So this investment would potentially bring a 25% upside, right? For argument's sake. If that IPO then goes to $3, $4, $5, 100, 200% higher than the offer price, that's mostly outlook and sentiment. You understand, Andrew? So it's not going to be based on what we would have seen in the prospectus, because the prospectus and everything that we see there is usually not the exact fair price, but it's going to be somewhere in that region, right? Now we have seen where offers are strategically priced. Offers are priced to be attractive. But as we like to say in the group, again, in our Telegram group, if you're not currently a part of the group, feel free to join. You want to wait until that report comes out to see whether or not the current price is fair or not. So there will be a period where you're not sure, right? And that's a part of the investing process. If you wait to have all the information before you invest, you could potentially miss opportunities. But you can do a projection, you can do an estimation as to how the company will perform, how investors will respond, how other factors will impact them. So for example, we saw where as soon as the announcement was made for the restriction to be lifted, Main Event went up, because what investors may be thinking is that, okay, the thing that would have impacted them drastically, 55% of their revenues would have been from the entertainment side of their business. Though that 55% would have been severely hampered for the past 2 years, that is now no longer there. The question that I would have there now is, can they get back to their same, consistency? Do they have the same, team members? Do they sell any equipment that now they need to repurchase? Do they have the same clients? Maybe some clients moved on. Like, those are things they will probably need to work out. But you can know that they will be doing more revenues. Will that translate to more profits? That's what we want to see from the Q2 report, Q3 report, etc. So, as usual, as we always say, before you make an investment decision, speak to your licensed financial advisor. The PE is 101 times, so you have to determine whether or not you're comfortable with that valuation. Valuation is just, as I said, one aspect of how you assess a company. If you're not sure how to assess a company, we've done a video on fundamental analysis that you should check out. I'll try to link it if you're watching it on the replay, so you can see it as a video to watch after this one. So hopefully that answers the question, Andrew. I mean, Orville, it's not all, I know we joke about vibes all the time, but sentiment does play into it. If you think about it, the reason why certain houses cost more in certain locations, it's not the land is more valuable because in everybody's mind it's more valuable, right? So it is in more demand if you live in one area of the country versus the other. You can use the same materials, build a house in Kingston versus in Cherry Gardens. Maybe you can build the very same house, but where I live versus Cherry Gardens is going to be two different prices, the very same house. So those are things that you have to think about as an investor, and you have to know what other persons are going to value the investment, right? That is true, Peter, right? So let me share on the screen what Peter says here. With the COVID rate going up, if the government should clamp down, the first sector to be hit will be entertainment. That is true. But here's the thing now, right? And this is my suspicion, right? The reason why we were able to remove the restrictions is that so people are still getting COVID daily, right? But maybe it's not leading to the same amount of fatalities. And so at some point, it's just going to be a case where you get COVID, maybe it's not fatal, and it's not necessarily like a common flu, but maybe close to, right? We don't know what's going to happen, but if we can go the next year without any lockdowns, it's safe to say that maybe we won't have any lockdowns again after that. We just have to see, right? All right, Marvin is sharing some information about SMB. SMB curates leading event production for all scale events, including booth executions, corporate functions, award ceremonies, conferences, weddings, concerts, and stage shows. Okay, cool. And Marvin is saying COVID climb now maybe in fourth quarter. Let's see if we're able to go from March to November, right? Independence Day, Heroes Day without lockdown. I don't see why we would have any for Christmas, right? So we'll see. All right, guys. So thank you so much for being here. Thanks for all the questions. If I miss any questions, post it in the comments under the video. Thanks to everyone for being here. Please like the video. It helps us out a lot. Share this video with a fellow investor. If you know anybody who invests in main events, you're always talking about main event, send them this video. It could be helpful to them. Peter, S&B is a company that Norbrook Equity made an investment in. So we're just talking about it. Let me share it there for you to see. All right. So yeah, man, it is similar, right? So that's why I wanted to talk about it. It came up in my research. So I just wanted to point that out because, I mean, as I said, if Norbrook made an investment, maybe at some point, maybe that company will list, who knows. But I mean, there was an interview with Kari by 876 Invest. I'll try to link that as well. That they were speaking about the strategy for Norbrook. So it could be that they're investing now to potentially bring that company public one day, who knows, right? So that's why I want to learn more about the company, because this could be a company that we're talking about a year or two from now, right? All right, yeah, so I definitely know based on what Marvin just shared and what we saw, it is similar to main event, right? So that's why we want to see, because the competitors for the industry will impact the potential revenues for the company that we're reviewing. So we want to know who is in the space and see if there are anything that we can glean from that information. All right. Yeah. Right. So let me just share what persons are saying in the chat. So they provide digital. Yeah, man. Yeah, man. You can get that from what a Google search will bring you. All right, guys. Thanks again. Please like the video. On Friday, we're gonna have the weekly stock review. Lots of things to cover in that video. That's probably going to be a very long video, because there's a lot of things to cover. I don't want to touch it on the stock review though. So see you on Friday, 6:30 on Friday. If you're not on our Telegram group, join us there. If you need any help or support, feel free to reach out anytime. We'll help you with anything that doesn't have to do with telling you what to buy or sell. We can't do that, but we can help you find the information. We can help answer questions, anything to that effect. And so, yeah, I'd like to just leave you with our founding scripture, which is Deuteronomy 8:18, which says, "Remember the Lord your God, for it is He who gives you the ability to produce wealth." So at all times, we want to honor God for giving us the knowledge and wisdom to be able to make wise investment decisions. I know for us, we are grateful that the Lord has, given us the skill set to be able to invest. It has really brought us a long way. So, if you need any help in that space, just, feel free to reach out to us. I hope to see you in the next video. I really do hope you enjoy the rest of your night.